Welcome back to the channel, everyone. Take a moment and get comfortable, because what I'm about to explain isn't just another generic end-of-year rally call. This is the type of setup where those who are paying attention get positioned early, while those who stay distracted end up completely blindsided. Right now, a large portion of serious analysts, especially the ones who actually track macro liquidity cycles and institutional positioning, are pointing toward a powerful rally into year-end. And here's the uncomfortable reality. Most retail participants have no clue how well XRP is already positioned to benefit from what's coming. While people waste time arguing about price targets, obsessing over market caps, or panicking over small pullbacks, the underlying data is shouting something very clear. XRP is entering an opportunity window we haven't seen in years. Some analysts are even projecting three-digit price levels this year. That might sound absurd to the average viewer, but once you understand the fundamentals, the macro liquidity environment, the timing, and the supply dynamics, it becomes clear why these projections aren't just empty hype. The math, the infrastructure, and the timing are all aligning at once. And if you're currently bearish on XRP, brace yourself, because the information I'm about to share explains exactly why that bearish stance is likely to disappear quickly once the next move begins. This upcoming phase won't reward hesitation. It will reward conviction, preparation, and an understanding of the data. So hit the like button, drop an X in the comments if you're committed to XRP, and let's dive in. Happy holidays to everyone traveling. Stay safe, stay sharp, and stay ready, because what's unfolding for XRP could completely reshape its narrative heading into 2026. When people discuss XRP's upside, they almost always fall into the same lazy mindset. They treat it like a stock. They stare at market cap charts, recycle outdated comparisons, and assume there's some imaginary ceiling XRP can never break. And every time I hear that, it tells me they don't actually understand what XRP is. XRP isn't a company. It's not equity. It isn't tied to earnings reports, quarterly revenue, or dilution cycles. XRP belongs in the same category as commodities like oil, silver, or corn, but with one major difference. It was purpose-built to function inside a global financial system. And if you understand how commodities are valued, you know market cap arguments are irrelevant noise. Commodities aren't priced by market cap. They're priced by demand, utility, scarcity, and the role they play in the system they support. XRP fits that model perfectly, which is exactly why institutions are focused on XRP while ignoring the chaos surrounding other altcoins. Legal clarity alone places XRP in a completely separate category. It's the only major digital asset with court-backed confirmation that it is not a security on the secondary market. Institutions don't gamble on uncertainty. They don't allocate massive capital to assets waiting on regulatory outcomes. They allocate where clarity already exists. And right now, XRP is the only asset sitting in that position outside of Bitcoin. Add to that the fact that Ripple is building payment rails that institutions already rely on. That's why ETF filings are accelerating. Even Cointelegraph highlighted that spot XRP ETF filings are increasing faster than any other altcoin because XRP combines legal certainty, institutional-grade infrastructure, and real-world utility. The only voices still attacking XRP are retail investors who don't see the larger picture. Institutions don't care about online tribalism. They care about efficiency. Ripple delivered a system that lowers costs, increases speed, reduces friction, and scales globally. Banks know it, governments know it, institutions know it, and once regulatory clarity unlocked the door, they didn't hesitate to step inside, and they're still coming. What most people fail to grasp is that these institutions believe they're early. They genuinely think they're accumulating XRP at generational lows. Meanwhile, retail holders who've been accumulating quietly for 5, 7, or even 10 years are already sitting at the table before Wall Street fully rotates liquidity into the asset. That's something people underestimate. Once these players fully commit, the opportunity window narrows fast and entry points disappear. On top of that, we're approaching one of the most significant macro shifts in years. Quantitative tightening ends in days. Rate cuts are coming shortly after. That environment is ideal for risk assets. And if you think crypto won't surge when liquidity flips back on, you're ignoring history. When QT ends, liquidity doesn't drip in. It rushes in. Markets don't care about opinions on social media. They care about liquidity, flows, and positioning. And XRP is better positioned than any major altcoin to capture those flows. ETFs are already absorbing supply at record levels. Institutions are lining up, banks are circling, governments are signaling that regulatory clarity is locked in, and macro liquidity is about to turn explosive. That's why three-digit XRP projections aren't irrational. They're based on the same supply-demand math institutions are using. Once OTC supply dries up, once ETFs are forced onto public exchanges, and once liquidity floods the system, XRP doesn't slowly climb. It reprices violently. If you believe a legally clear, globally focused settlement asset with shrinking supply can't add hundreds of billions in market value quickly, then you haven't studied commodity supercycles or supply shocks. Bearish sentiment at this stage isn't analytical, it's emotional. And emotional investors always end up on the wrong side of history. Now let's address the supply shock that most people are still ignoring. Many claim ETF accumulation won't move price because it's happening OTC. That's true for now. ETFs are intentionally clearing OTC liquidity to avoid triggering early price spikes. But OTC supply is extremely limited. It's not massive. It's already being depleted. Once it runs dry, ETF buying doesn't stop. It moves directly to exchanges. That's when volatility erupts. Exchange-held XRP is minimal relative to incoming demand, and ETF flows historically accelerate for months after launch, especially during liquidity expansion. When easing begins, ETF demand multiplies. That's why three-digit XRP isn't hype. It's supply versus demand. When demand overwhelms available liquidity, repricing is the only mechanism left. Commodities don't move gradually under those conditions. They leap. XRP is entering that same structure. And while retail assumes they have time, institutions are already removing the liquidity retail relies on. Once that door closes, it closes fast. That's why bears flip bullish overnight once price confirms the move. Now zoom out to the broader market. This setup isn't isolated. Liquidity conditions, sentiment compression, and forced buying are aligning. When the Fed pivots, markets don't drift, they snap. Funds trailing benchmarks will be forced to chase performance. And when that wave hits crypto, assets with clarity and infrastructure get the strongest bid. XRP sits at the top of that list. Add ETFs, shrinking supply, and macro alignment, and the outcome becomes obvious. This isn't hype, it's structure, timing, and mechanics. When you step back and assess everything converging, it's clear that doubters are operating on outdated assumptions in a completely new environment. XRP now has legal clarity, increasing institutional demand, shrinking liquid supply, and the most significant liquidity shift since 2020 approaching fast. Environments like this are rare. This is what it looks like before a suppressed asset breaks free. Once supply tightens and demand hits open markets, price becomes about availability, not opinion. That's when narratives flip. Whether the move happens in weeks, months, or into 2026, the scale remains unchanged. If you're still bearish, you're either missing the data or choosing to ignore it. Everything that matters is aligned. Liquidity, regulation, institutional confidence, and macro conditions are all pointing higher. Stay focused, stay informed, and pay attention to what major players are preparing for, not the noise. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making investment decisions.